For centuries, banks have been the backbone of our financial system. They store our money, offer loans, process payments, and maintain trust in the economy. They are deeply woven into every aspect of modern life, from salaries to mortgages, savings to investments. But now, a new challenger has arrived: cryptocurrency. Digital money, blockchain technology, and decentralized finance are challenging the very way we think about banks, control, and money itself. So the question is, who will win in the long term, crypto or traditional banks? To understand this, we first need to look at what banks do well. Banks provide stability and security. They are regulated, insured, and trusted by millions. Your money is stored safely, and you can access loans, mortgages, and financial products that have been refined over decades. Banks also offer convenience. You can withdraw cash, pay bills, and earn interest without needing technical knowledge. Banks also enforce legal protections. If a bank fails or a transaction is reversed, customers have mechanisms for recourse. They handle fraud prevention, identity verification, and compliance with national and international financial laws. For the average person, these protections create peace of mind, but banks have limitations. They are centralized institutions, meaning decisions are made top-down. Banks decide who gets a loan, who can open an account, and how money flows. Fees for transfers, account maintenance, or currency exchange are common. Their systems can be slow and approval processes bureaucratic. Trust is placed in the institution rather than the system itself, and if the bank makes a mistake or is hacked, customers bear the consequences. This is where cryptocurrency enters the picture. Crypto is decentralized, meaning it isn't controlled by any single institution, government, or bank. It allows peer-to-peer transactions across the globe, often instantly and with minimal fees. Ownership is verified on a blockchain, a secure digital ledger that anyone can audit, but no one can manipulate. This transparency gives users control over their assets without relying on a bank or middleman. Cryptocurrencies like Bitcoin and Ethereum operate on systems designed to be secure, transparent, and resistant to censorship. With crypto, your money isn't tied to a bank's rules or government regulations. You can move funds across borders, invest, or hold assets without interference. For people in countries with unstable banking systems or restrictive governments, crypto offers financial freedom that traditional banks cannot provide. But there's a trade-off: volatility. Crypto prices can swing dramatically in a single day, while banks provide predictable interest rates and insured deposits. While volatility allows for massive profits, it also brings the risk of significant losses. Stability remains one of banks' strongest advantages. For many, the risk of losing a large portion of their savings keeps them tethered to traditional finance. Innovation is another area where crypto shines. Banks are slow to change. New products require approvals, regulatory compliance, and bureaucracy. Crypto evolves at lightning speed. Decentralized finance, or DeFi, allows lending, borrowing, and earning interest without intermediaries. NFTs, tokenized assets, and smart contracts offer new ways to invest, own, and interact with digital property. In short, crypto doesn't just challenge banks. It reimagines the financial system entirely. Real-world examples make this clear. A person in a country with high inflation can convert local currency into Bitcoin to preserve wealth. Someone in a country with limited banking access can use crypto to save, borrow, or earn interest without ever stepping into a bank. Meanwhile, people around the world are trading tokenized art, real estate, or digital collectibles, all without traditional institutions. These examples show crypto's ability to democratize finance and create opportunities banks cannot match. However, adoption remains a challenge. Most people still use banks for salaries, payments, and basic financial services. Crypto is growing rapidly but isn't yet the primary financial system for most. Regulatory uncertainty, security risks, and technical complexity slow mainstream adoption. Banks are heavily regulated, insured, and backed by governments, giving customers confidence. Crypto offers freedom, but that freedom comes with responsibility and risk. The long-term future may not be a simple competition where one wins and the other loses. Instead, it could be a hybrid system. Crypto could handle borderless transactions, decentralized lending, and digital assets, while banks continue to provide stability, insurance, and traditional financial services. Some banks are already exploring blockchain technology, issuing digital currencies, and adopting crypto-friendly policies. This suggests a future where banks and crypto complement rather than replace each other. Education is key in this landscape. Understanding both systems, the security and stability of banks, and the transparency and freedom of crypto is essential. People who grasp the strengths and weaknesses of each will be better prepared to navigate the financial world of tomorrow. The ultimate winners will be those who learn to use both systems wisely. If this story helped you understand the tension between crypto and banks, take a moment to subscribe to the channel. More deep dives into the evolution of money, finance, and technology are coming, and you won't want to miss what happens next. Knowledge, preparation, and awareness are your first steps toward thriving in a world where crypto and banks coexist, compete, and reshape the way we think about money.